credit for your kids. Did you know that putting your kids as an authorized user on your credit cards really doesn't help them in the long term, especially when they're going to get a mortgage when they might be young adults? So recently, I actually had a young adult come to us for a loan. He was 23 years old, had his savings, had a good job, and he was ready to buy a house. And he's actually the son of my really dear friend. And Christian made application, we pulled the credit, and he only had a couple of trade lines on his credit that happened to be his mother's credit card. So mom did what she thought would be the great thing. And a few years ago when he was in college, she added him to her American Express and another Visa credit card. Well, it's okay, but when you're trying to get a mortgage, what happened is we wanted to see, especially when he's putting a low down payment, we wanted to see what Christian's credit was after we lifted him mooching off his parents' good credit that was very seasoned and many, many years old. And when we lifted the veil, we found that there was really nothing underneath. There was nothing that he could really hold his credit on. So in turn, what this video is going to talk about is how to simply start your credit for your kids on a path. It's super simple. All you need is one credit card and one installment debt. So that's what we're going to talk about today, how to build credit for your kids. I'm Jen Hernandez. I've helped over 4,600 people finance homes over the last 28 years, and I want to bring you real facts, no BS. Let's get started. So step one to building credit for your kids. As soon as you're able to get them a secure credit card, I think that's at the age of 18, you want to do that. So I'm going to put another video in the description called How to Open a Secure Credit Card. But the bottom line is that you'll go to a bank. Not every bank does this, by the way. So you'll want to Google or check with your bank or credit union first. But the language that you want to use when you ask the bank is, do you offer secure credit cards? I'm trying to build credit for my young adult child. So they'll say yes or no. So find one in your local area, and they'll need to make application just by themselves. And what they do is they're putting a savings, they're basically opening a savings account. Let's just say $500. You put $500 in a savings account with the bank, and then they get a credit card for $500. So the savings is the backup in case they don't make a payment. Of course, the bank is going to take the money from the savings account. So caution here, make sure that they treat it like a credit card. It's going to have a recurring monthly payment. Make sure they get on an auto draft so that that is not ever chance to be late. The other important thing with a credit card is not to spend more than 30% of the credit in any given period. So if your credit card, secure credit card, was a $500 limit, just to be safe, I would never spend more than $100, just to be safe. And that's in any 30-day cycle that is reporting. Now, they don't have to carry interest, they don't have to carry a balance, they can pay it in full when the statement comes out every month. But that is the surest way to start building credit in their name only. So any questions about that? Want to hear your comments? Please ask me comments and I'll answer them and answer any of your questions. Now, there's a second step that you can do to ensure that your kids are on their way to have good credit. So a lot of parents buy a car for their kids, or their kids will buy a car. So if in any way possible, finance that car. Paying cash for the car will not help your kids. So on this one, let the child, the kid, the young adult, be the main person on the loan. And then you can be a co-signer. That's okay. That's different than an authorized user. So you can be a co-signer, but we want this to report to the Bureau in the child's name. So take out a loan, pay on the loan, don't pay it early. The way that the algorithm for the credit is going to be sparked is by the repetitive, continuous, on-time payment month after month after month. Did you know that every 12 months, whether you have a credit card or an installment debt like a car, you get more points, more points, more points. So that's 12 months, 24 months, 36 months. Actually, by having a recurring monthly payment is more beneficial to your score than taking out a loan and then paying it off. So a lot of people are under the impression that, oh, if I take out a loan, make a few payments, and then pay it in full, I'm showing the Bureau that I've paid it in full. That actually goes against you because it shows there's nothing to rate. So the score is sparked again by the repetitive activity of paying on time, paying on time, paying on time. So these are 2 simple steps. Your kids can be on their way to having deep, repetitive credit so that when they do go to buy a house, when they're young adults starting their lives, they're going to be ready. Let me hear your questions. We now have a video about building credit secrets that you'll never find on the internet. Talk soon.